The pre-bonding trading for Toshi Mart is now live on Token Pocket. You guys can check it out to bring yourself up to speed. And in this video, quickly, we're going to be talking about the probability of rate cut in September, and not to forget the Toshi liquidation heatmap. There's a lot we need to discuss about this Toshi liquidation heatmap, and not to forget the BTC liquidation heatmap as well. We are briefly going to talk about the Toshi price on the 4-hour time frame and also the Toshi price on the 30-minute time frame. Now, if you are paying attention, the current Toshi price is seated at 0.007415, and the market cap is still over $300 million, if you ask me. So yeah, and we are going to briefly talk about the Ethereum dominance chart. Yes, you heard that right. We are going to talk about the Ethereum dominance chart. This is a very, very important indicator for altcoins as well. And not to forget the BTC price dominance chart on the weekly time frame, the BTC price chart, the TOTA3, the Ethereum price chart. And yeah. So before we proceed, my name is Isaac. For those new to this channel, you're welcome. And let's not forget, we're going to be going through the Toshi Mart space that happened a couple of days ago. I gave you guys a heads up of this space in the last Toshi video. Before we proceed, my name is Isaac. In case this is your first time on my channel, don't forget to hit the subscription button, turn on the bell icon to get notified each time I drop new video. And if you're here to like this video, please smash the like button, destroy the like button. The PPI came out higher than expected. We got a 3.3% increase, which was the reason why the market tanked yesterday. Toshi tanked minus 16%. I wasn't in a position to make a quick video for you guys yesterday. I would have updated you guys ASAP. Worst case scenario for Toshi would be 0.00061, 0.00058, which was the previous resistance we've discussed on our channel countless times. So that previous significant resistance zone is likely to be a strong demand zone for the Toshi price if the market should continue to tank. The Toshi Mart space highlight that was posted on CoinMarketCap, you would notice the part 1 here says Toshi Mart Launchpad. The Toshi Mart is the official Toshi Launchpad built in partnership with the Cedric team at Flab. Flab has a deep technical expertise, DeFi infrastructure experience, e.g. Uniswap V3, and a strong industry connection. Now, the mission for the Toshi Mart is to make Toshi the default currency for launching and scaling tokens on the Base network, which is massive if you ask me. A lot of people are yet to understand the benefit of this Toshi Mart. Now, the benefit is Toshi holders benefit passively and directly from the Toshi demand and supply being locked in the liquidity pool. Creators who launch token paired with Toshi or Ethereum earns 50% of all trading fees from their tokens' decentralized activities, which is buying and selling. Now, traders can gain upside from both the new tokens and Toshi by buying Toshi pair launches. That buy pair with Toshi instead of it. Tokens paired with Toshi locked Toshi in liquidity pool, reducing the circulating supply. And if Toshi outperform Ethereum, e.g. higher percentage gain, pairing can amplify return, although with higher volatility as well. So the liquidity pool lock for Toshi is likely to reduce the circulating supply, thereby increasing the demand and also the value of the asset, which is the Toshi asset. This is the part 2. You can as well go through the part 2 to bring yourself up to speed ASAP. The chart is still looking very, very bullish. We are still over $300 million in market cap. Now, anything below $300 million is, should I say, a generational entry opportunity for Toshi. Very soon, we are going to begin to see a $3 billion market cap for Toshi, which is a 10x from here. A $15 billion market cap is likely to be a, 50x from here. You guys need to seize the opportunity while it lasts. If you're paying attention to the Toshi liquidation heatmap, we have liquidity both to the upside around 0.00079, and also we have liquidity to the downside all the way to I think where majority of the liquidity is seated is around 0.00071, We have over $38,000 worth of liquidity there. That area is a very, very important zone, because if you are going back to the Toshi chart, you would notice 0.0071, right? Yeah, you would notice the 0.0071 was where we got the bounce from when this correction happened. BTC tanked -5%, while Toshi tanked -16 yesterday. So that zone, that liquidity zone is a very, very important area. We might range there for a while before deciding the next direction for the entire market. Let's not rule out the fact that we are yet to properly fill the CME gap around $17,000 for BTC. This is a Toshi 30-minute time frame, and if you're noticing, we have a fair value gap here, a potential order block, if you ask me, a break of structure here as well. So if we are to get this correction, I think we should get a correction to this candle right here, which aligns with the liquidation heatmap price of 0.00071. If you're going back to the liquidation heatmap, you will notice where majority of the liquidity is seated is currently at 0.00071 as well. So that area is a very, very, very crucial area. Now, I think the pattern the liquidation heatmap usually follows is by the time it gets to that liquidity zone, it is likely to dip down further a little bit to sweep any other minor liquidity below it. The reason why I'm saying that is this week has also given us signal that we might go beyond, you understand, go below this price area to clear all the liquidity this week have left behind. A reclaim of 0.00075, a reclaim of it with at least 2 daily bullish candle above it should send us to a higher price for the price of Toshi. Now let's pay attention to what the BTC liquidation heatmap is saying. We have liquidity around the $17,000, and also we have liquidity around the $120,000 for BTC. So the BTC price has been ranging between $120,000 and $17,000 for a while now. And if you're going back to the previous BTC chart we've talked about countless times, this was the previous range we've been following since the range formed. We broke down, we still followed the range until we came back in. I think now, after making a brief new all-time high at $124,500, BTC tanked heavily into this range zone. I think this tank was as a result of the PPI, the weak PPI data that came out, 3.3%. There's a 92.6% chances of we getting a rate cut in September. The next Fed meeting is expected to happen in September 17, 2025. And there is 7.4% chances of we not getting a rate cut. But I think the chances of the odds of we getting a rate cut is higher. And like I said in the previous videos, the rate cut is likely to mark the beginning of the end of this current market cycle. Q4 2025 is going to be a massive turning point for the entire market. That is when a lot of people is going to be confused as to when to sell and exit their bag. And that is where the BTC dominance comes in. Now, this is the BTC dominance on the weekly time frame. By the way, once again, my name is Isaac. For those new to this channel, you're welcome once again. Don't forget to subscribe to this channel. Turn on the bell icon to get notified each time I drop new video. If you're here to smash the like button, please smash the like button. Thank you. The BTC dominance is currently at 59.35%, and my DCA into some altcoins. I posted it on the Telegram channel for you guys as well. I DCA into some meme coins and also into some altcoins. Some of the altcoins I'm already holding. I had to just buy more since they were already in the discounted zone. So you guys can check it out on the Telegram channel to bring yourself up to speed. So we're waiting for the 63% for the BTC dominance to get hit, but we pumped close to that area. We pumped to as high as 62.62% and then got a rejection from there. Broke this crucial, very important support at 60.44%. Now, the truth of the matter is the BTC dominance is left with 2 days and 15 hours until this current weekly candle closes. And there is something I want to bring to you guys' attention now. This weekly candle is currently approaching a breaker block. Now, it has even tapped into the breaker block. If you are to break down to the daily time frame, it has already tapped into the breaker block, which is signaling we might get a reversal. But I was expecting the reversal to happen from around maybe by the time we get to 58, 57% before we get the reversal. That's the projection I drew here. So let's see, fingers crossed, let's see how it goes. But if you are going to the Ethereum dominance chart on the same weekly time frame, Ethereum dominance just tapped into this weekly bearish breaker block between 15.66% and 14%. That is to say, we might still push into the bearish breaker before maybe getting a slight rejection from there. I don't know what is going to trigger the dump we should be expecting in August, before August comes to an end. Maybe August 22nd, 23rd, 24th, we are likely to get a pullback in the entire market before the final leg up into September, October, November, December. So you guys need to jot the dates down, be like, stay at alert. I'm not selling, I won't be selling anything. I won't be selling any of my holdings. I just want to bring it to your notice. So we might still pump into this bearish weekly breaker block and even go as high as 15.66% before getting a rejection. And if that is not happening, then we might just start getting a rejection outrightly immediately. Now, the total trade market cap is looking bullish. The last time we talked about this in our previous video, I told you guys, even if the total trade market cap is to get a rejection, we are going to bounce from this $1 trillion zone. That was exactly what happened. When we got that massive rejection, when a lot of people were panicking, we got a bounce from there to the upside. Ethereum is still looking ultra bullish. As a matter of fact, Ethereum is currently outperforming BTC. Like the Ethereum dominance I showed you guys, the dominance is going up, like it's pumping, is rising, while the BTC dominance is dumping. That is signaling that Ethereum is currently outperforming BTC. And sooner or later, the large cap altcoins are going to catch up with Ethereum pump. Whatever large cap you're saying that is yet to break resistance, very, very soon they are going to begin to take out their own resistance, just like what Ethereum did as well, by taking out this very crucial resistance around $4,100. So by the time the large cap take out their resistance, the mid cap and the low cap are going to follow suit. If we are to lose the $116,500 for BTC, then there's nothing stopping us from getting back into the 110,000 zones. By the time the BTC dominance gets to the zone around 44-42%, this is where I'm going to be selling everything and wait for the market to reset. I wouldn't want to time the exact exit bottom on the BTC dominance, which is around 39%. No, I'm going to be selling all my altcoin bag and wait for the market to reset. We have a huge fair value gap between 47% and 44% level. That is to say, by the time the BTC dominance gets to the 47% level, then nothing is stopping it from getting to the 44% level, which is where smart monies are going to exit their bag. You understand why the dump money will be waiting for the 39% level at the end of the day, maybe end up round tripping their profit. So if you want to be on the safer side, by the time the BTC dominance gets to the 47% zone, you should take few profit from your altcoins and then wait for the final take profit around 42% level on the BTC dominance. You understand? So fingers crossed. See you guys at the top. Peace.